After a week that saw stagnation from the overall market and teasing from growth stocks, and despite blue chip earnings beating expectations at a record rate, well, many are looking forward to this week's earnings and saying, there's a lot of growth stocks that are up to bat this week. And of course, with all of this in the forefront, we must be answering just one simple question. And that question is just, what are the top 3 stocks for this week? But first, I want to go ahead and recap some of the plays from last week as well as some of the news heading into this week. In terms of Bitcoin miners, we had Mara and Riot perform well towards close on Friday as Bitcoin showed some resilience. But over the weekend, Bitcoin got badmouthed by one of the most famous and accomplished investors of the last 60 years, Charlie Munger, who is Warren Buffett's right-hand man. He said, and I quote, "Bitcoin is disgusting and contrary to the interest of civilization." Those are some big bad words, folks. He said Bitcoin is, quote, "so useful to kidnappers and extortionists," implying, as so many others have implied, that criminal activity makes up a majority of Bitcoin's transactions. But with all due respect, sir, the data just does not show abnormal criminal usage for Bitcoin. In fact, in terms of economic activity, illicit activity counts for just a small sliver of cryptocurrency transactions as a whole. But in terms of Bitcoin itself, studies showed that the number of Bitcoin transactions linked to illicit activities remains below 1% and is on a consistent downtrend as more and more institutions take up a bigger share of crypto transactions. But casting out 99% plus of legal transactions because there's some criminals that use Bitcoin, it doesn't make sense. He's also making this criticism amidst a wave of institutional banks that are going and adopting Bitcoin and other cryptos. Renowned banks like the Sachs of Goldman, JP Morgan, and Morgan Stanley, amongst many others, are piling into Bitcoin and other cryptos and even advising some of their wealthiest clients to buy Bitcoin as part of their portfolio. And amongst others piling into Bitcoin at record paces, Charlie Munger does admit that he hates Bitcoin's success. In the first few years of Bitcoin, when Bitcoin was trading in the low $100 range, Charlie Munger called Bitcoin rat poison. In 2018, he called cryptocurrencies as a whole a range of words from disgusting, stupid, immoral to turds. And look, folks, I don't disagree with some of the premise of his argument. In the past, he said, hey, Bitcoin isn't good because there's a lot of people buying it that don't understand it. There's a lot of volatility. And there's unclear regulatory environment, and all those things are true. However, it makes me really sad when they peddle the criminal activity aspect of it because it's just not the case. In terms of day trades from last week that I've been requested to review, in NFT exposure stocks, we saw TCAT wake up on Thursday. For those of you who are utilizing our short-term trading style, the goal of these plays is when you find them, buy in at a break above the price strength below SMA line, which we call a confirmation, and then ride the strength until we get that consistent break back below that same line. That combined with the flurry of elevating factors that we as traders look for, as well as volume, can be indeed quite powerful. And in the case that you get a fake out and it breaks back below, well, you still have that same exit point at the break below that SMA line. Another example, in terms of BTX, on Friday, they acquired a license for an mRNA technology platform, which is the same technology as the Pfizer and Moderna vaccines for COVID use, but this would be used to treat certain cancers. Awesome technology, love that they're working on this. But in terms of traders, this caused a lot of flurry, a lot of action into the stock on Friday. And unless you have a crystal ball, you're not going to know how far something like this can run. So our style is saying, okay, hey, let's stack our elevating factors and let's control our risk for when we're wrong. Do we have a break above our blue price strength SMA line? Do we have a positive direction over our red directional SMA line? Are we going to be committing to selling out when we get a break back below? If you're trading and you get faked out, which is inevitable, are you going to keep true to your exit point? You can't just hold winners because they're winning. You also have to make sure that you're cutting your losers. And that's the whole key with trading, especially on a very short-term basis. For example, UXIN midweek went from 171 to 394 in a matter of a day, and that provided a very strong, clean run over that blue price strength SMA line, which was a trader's gold mine. But then the next day, what happened? Well, it was a wilder ride. If you bought in here, if you bought in early in the morning like you had yesterday, well, it would have tanked and you would have lost money. So how do you control that risk? Well, the same way that you control it on stocks that run, by having a concrete exit plan at that break of the SMA line. In terms of our briefing plays, ISNS was a very interesting beast to cover. We briefed on it Friday amongst a positive catalyst, and it pretty much traded sideways for most of the day. And then what happens towards close? Well, we finally get that consistent break above the blue SMA line and a rally into the after hours. Playing the strength over the SMA line and then having that concrete exit point means the world with a lot of these plays that just go up really quickly and they go back down. Okay, folks, now it is time that we get to work. What are the top 3 stocks for this week, Charlie? And always remember, folks, every stock is a battlefield. I can point you to battles that I see value in, but it's up to you to prepare for battle, and it's also up to you to fight your own battles. So come ready and bring your sword. Anyways, before we get into it, the only thing I ask of you is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, so first focus is a short-term trade, AMC. Look, folks, I don't believe that AMC is a good value over the long run. I don't like it. It's been largely shuttered for a year. It almost declared bankruptcy. The movie theater industry has been on a decline for years, and it's been pumped to its current valuation largely because of the hype from Wall Street bets. But it is set up really, really well this week to spike. Why? Well, because it's been massively short sold, and on Thursday, they're coming out with an earnings report that's going to be painting a very cheery picture for AMC. We know that AMC as a company is set for a dramatic bounce as we leave the pandemic and movie theaters start really operating. In fact, over just the last month, almost all of AMC's theaters have reopened, and in the next couple of quarters, more and more Americans are going to be going out to the theaters. In the next 12 to 18 months, AMC, the company, is going to look like a growth stock, reporting massively increasing numbers. But in the next 5 years, guess what? AMC is not going to be looking like a growth stock. It's going to be looking like a dud in a dying industry. Movie theater audiences have been declining for years. I do think that there's always going to be some market for movie theaters because people want to see things in theaters and people want to have outdoors activity. They want to get out of their damn home. But it's going to be at a much lower level than what we're going to see over the next couple of years. So certainly this isn't something that I'm making an argument for a long-term play. This is a short-term trade. There's going to be a lot of opportunity to buy into strength and then get in and get out. Last earnings, we saw a 40% plus pre-anticipatory run up to that earnings, and then we saw a drop. I expect similar opportunities to trade off of this week. Quite frankly, traders know that AMC has a lot more good news than bad news coming forward in the next 6 months, so it's likely that we do get a pre-anticipatory run or at least a post-earnings boom followed by profit taking similar to what we've seen in the past. So if you're going to play this, make sure that you're keeping true to your entry and exit plan. Okay, next, Uber and Lyft. So I'm going to go ahead and combine these together because they have similar catalysts this week as well as similar bad catalysts from last week. So the negative catalyst from them from last week is that a Biden official wants to classify gig workers at Uber and Lyft, a large portion of them, as employees, which of course would be a drastic blow for any company like Uber and Lyft that operates out of a gig economy. And these are companies that just invested tons of money and won in California the right to classify their drivers as independent contractors there. And now the idea that the whole US is going to be fighting them is a much scarier picture. That being said, at this point, we still don't have an official announcement nor official details on exactly what workers and how many workers and what qualifies to be a independent contractor or a full-time employee in the Biden administration's eyes. Nor do we know how big of a priority this is going to be. And even if it is a huge priority, it's going to see a lot of resistance in Congress. Let's be real, Uber and Lyft were able to convince some of the least willing voters in California to classify drivers as independent contractors instead of employees. And on the federal level, you have a lot more diversity in terms of political opinions. And honestly, with all the other measures that the Biden administration is trying to push forward in terms of infrastructure, in terms of a host of other things, I think that this would be a fairly low priority right now. It just doesn't seem like a very good use of political capital, seeing as though that these bills have been defeated in states that tend to more favor proposals like this. So with them reporting earnings this week, Lyft on Tuesday and Uber on Wednesday, and both of them having a history of pre-anticipatory running up to earnings, I think that we have a very good opportunity this week to trade off of. Here's the deal. On a fundamental basis, Uber and Lyft are set to dramatically increase their revenue as we leave the pandemic. The number of ride-sharing customers has dropped dramatically because of COVID, and people don't want to go and ride with COVID. Yes, on the other hand, food delivery was a benefactor of COVID, and food delivery is going to stable out a little bit and probably decrease in terms of growth rates, and that's more impacting Uber, who really benefited from Uber Eats, but net leaving the pandemic will be good for both Uber and Lyft. And with the current beatdown, Lyft and Uber are trading low, setting them up for a pre-anticipatory run as investors anticipate a beat on guidance, because Uber and Lyft are going to be projecting positive guidance for the summer and upcoming quarters. Okay, next, in terms of a stock that is likely going to outperform in the next couple of quarters, but largely hasn't been factored in any excitement at all, I would say Zillow. Right now, one of the hottest sectors of the economy is real estate. The pandemic accelerated the desire to move out of the crowded cities with all those apartments cramped together and go out into the suburbs. People wanted more space. They wanted some more room to gallop and ferment. Even in California, the Los Angeles Times reports that Southern California home prices are up 15% from a year earlier, and California's housing market continues to smash records despite California actually losing population to other states during the pandemic. And I think that California is actually on a bad spiral over the years. I know that's not exactly an unpopular opinion, but still the real estate market, especially in Southern California, is very, very hot. And that's true throughout the country. Many, many markets in many, many cities in the US are hot because of record demand and low supply. But keep in mind, spring and summer are coming, and that's traditionally the time where people love to buy and sell homes. And all those people that didn't want to sell their home and were trying to be a little extra careful because of the pandemic, well, they're going to go and flood the market this summer, as well as a lot of the buyers that were waiting to leave the pandemic to make sure they were on good financial footing. Yes, this is a very, very expensive real estate market, but interest rates are at record lows, and a lot of people think that it's not going to stay there for very long. And this is amongst an environment with record savings rates, which means more money than ever to put down a down payment. The truth is that real estate transactions are going to go through the roof this summer. You're going to have a lot more sellers and you're going to have a lot more buyers. So Zillow is set to massively benefit from this trend. A strong increase in searches and a strong increase in transactions. Okay, folks, anyways, that caps off the video. We'll be talking more about the other catalyst plays as we get there this week. For example, other notable ones are Chegg on Monday, Skills on Tuesday, Fastly on Wednesday, and a host of other ones like Square and DraftKings towards the end of the week. We'll be keeping you updated on this channel and in our daily morning briefings as always. And of course, quick plug, this video is sponsored by ZipTrader U. Let's be real, a lot of folks struggle with growing their account because they don't have a clear process. They just kind of hop from one strategy or one headline to the other. But similar to an exercise program, oftentimes if you don't have a clear structure, you're going to be very, very demotivated. You're going to quit quickly. You're definitely not going to have the confidence to stick it out. You're going to feel lost. So the goal of ZipTrader U is, of course, to provide you with a step-by-step structure and also allow you to work with our private chat and be briefed every morning on what is happening and where the stock battlefields lie. Anyways, folks, if you are interested, I'll go ahead and put the link below and you can watch the intro video where this charming gentleman will explain everything you need to know if you want to take the leap and join us. I also just added a coupon code Battlefield75 if you want to get $75 off before checkout. Anyways, folks, that caps off the video. Have a great day and I'll see you in the next one.